What's up, everybody? Zach is back with another episode of Journey to. You know what time it is. The blog post is live and available on prostockedvice.com. Let me go ahead and pull that up while you guys go ahead and pull that up too. Don't you know? And wow, what an interesting day it was in the investing and stock market community. A lot of people decided to sell today with the news coming out that Biden is proposing a tax hike. Isn't that great? And you know what? I got a few things to say about that, so let's just see how it is. Let me pull this up on my screen. But first of all, I would like to talk about the short-term options. These were all from earlier this week. We're doing about 63% accurate for this week, and this week has been choppy. Monday and Tuesday were red as can be. Wednesday bounced. Thursday, I was thinking that we were going to have a green day, but hey, guess what? Surprise tax hike. So we didn't quite. But I was in one. I was in a couple that worked out yesterday, if you guys were following along. The Beyond Meat, it worked out. I took profit at 245, got out of it quick, and that's what I usually do in the choppy markets like this. Visa, I turned 30-something% on Visa, so that was good, and that was one of the only stocks that finished up. Visa and MasterCard, I believe, but so that went pretty well. The Tesla, I cut the loss. I think I could have held on to that one a little bit longer, and I think that it would have probably ended up making something, or could have broken even. But with such a choppy market, I'm okay to cut a loss. I think that was about 20% loss on the Tesla one, so that one hurt a little bit. But I think we did 20% on the other Tesla one from before. But nevertheless, the Microsoft that one was one I was holding through the tax hike news. I think it was 1 p.m. EST. And I ended up cutting that one as soon as that news came out. And then the NEO one, I pretty much got out flat. So overall was a hard day trading options. And that's kind of what happens with earnings reports, choppy weeks, up and down, and any big major news coming out of the administration or from the Central Reserve Bank or whatnot. But anyways, it is what it is. My portfolio was down 3.8% as of yesterday, so it wasn't very good, but what do you expect? And so I'm currently down 6.4 for the week. Not as bad as I thought, to be honest with you. I'm just so happy that we got out of the dip for the most part. I mean, it was dipping pretty hard there for a minute or two, for a couple of weeks or two, maybe even a month. All of March was pretty painful, so hey, it's okay. I think we're almost back to where we started. Well, we were past back where we started in from the beginning of February, but now down a little bit again. But overall, not very much. So we're doing pretty good. I'm not feeling so bad about it. I mean, what are you gonna do? It's pretty much like that. And now it just provides us with a really good buying opportunity, I think, because that was a gross overreaction to that news. I mean, the Biden he's proposing this, so first of all, it's no guarantee that this is going to pass or anything. And by the way, what were you guys expecting? What were these investors expecting? I mean, they knew, like, Biden was literally talking about this raising taxes the entire time he was running, and he's mentioned it a few times before. He's already raised the corporate taxes from 21 to 28%, I believe, and because it was 35 under Obama, and then Trump lowered it to 21. And I think Biden just hiked it up to 28. Don't quote me on that, but that's just off the top of my head. And that was a month or two ago. It wasn't that long ago. And he's been talking about the capital gains. And I thought that I had heard he was planning on doing it from people making more than $400,000 a year from 15% to 30%, which that one's a little bit scary, to be honest with you, because there's a lot more people that are making 400,000 ish, 500,000. But if you're making over 500,000 now, it's only a 20%. Your long-term capital gains is 20%. But now, what he is saying is, if you're making more than $1 million per year, so that's not very many people, although it's enough. And for those people, the really rich people, those people might have net worth of 20 million plus, I assume, something like that. So it's not very many people out there that's making $1 million a year in long-term capital gains be doing it. So basically, if your net worth is $20 million and you want to sell off $1 million, buy some properties or something like that, or for whatever reason you want to sell something for one of your long-term investments and whatnot, yeah, and it's more than $1 million, then you're going to get hit with maybe more than 50%, including the state taxes and state levies. You could be paying more than 50%, but pretty much. Let me just go ahead and share this screen. But yeah, there was a huge overreaction to that, which is not most people are going to be affected. It actually is going to be the exact same. But let me just read this to you. At the proposed rate, someone making at least $1 million could pay as much as 39.6% in capital gains taxes. Then there's the investment income surtax, which would bring the total tax rate to 43.4%. Those making more than $496,601 per year, but less than $1 million, only going to be paying 20%, which is the same as it has always been. And if you're making less than that 496, then your long-term capital gains will stay the same at 15. So most people are just going to be paying 15%. Like if I'm selling, and periodically, like I will sell maybe $300,000, and because I want to take it out of my stock account, so I'll sell some stocks worth of, or maybe let's just say 300,000. And then I'll buy a house or something like that. And maybe even when I get to $1 million this time, maybe I'll sell off 300,000 and go buy a house or something like that, a rental property. I don't know. But that's my plan, and that's what I've always done. So this is even the 300,000. I'm not even going to get up for my long term. At least I'm not going to pass the it's pretty much $500,000 threshold to bump myself up to 20%. And I think, but the vast majority of people they don't need to worry about this at all. 15%, 15%, 15%. It's only going to be 15% ever if you're making less than $500,000. But of course, if you're making in between $500,000 and $1 million, you're going to pay the 20%. But that's how it's always been. No change here. But then the people making $1 million or more a year, which is a lot of money, and that's not going to affect most people. Then yeah, they might actually be paying 50% or so. So that's pretty much what it is. So I think that's a gross overreaction, considering how much the markets fell. Just totally wiped away my gains for the week, which is unfortunate. And the thing is, for the first time in my life, I always don't want to raise my taxes. Why do you raise taxes? Just keep the taxes low, keep money in the pockets of average Joes, and they can circulate it back into the economy. That's what I've always thought. But this is the first time in my life since after the COVID. I mean, we really need to stimulate the economy, I think. And the infrastructure package, I support most of it. I mean, there might be a couple of silly things in there, but it's with everything there is. So I support it, and I think the U.S. is in dire need of better infrastructure and an infrastructure package like this. Plus, the infrastructure package is not just going to be like a stimulus check where it's only going to boost the economy for that moment, for that month or so. But the infrastructure is going to be over 5, 8, 10 years or so, and it's always going to trickle down to create the jobs for the working on the roads or highways or airports or whatever they're doing, the water pipes, right? But so that's gonna last a lot longer. So I really do support the infrastructure package, actually. And the funny thing is, this tax hike that Biden has proposed is said to, they're estimating that it will raise $1.5 trillion. And the funny thing is, that's pretty much going to cover all of this infrastructure package. So I have to say, I kind of support this. And a lot of people are freaking out. And that the funny part is, there's a lot of investors that they're not making anywhere close to $1 million, and I'm not either. And so whatever doesn't really matter. And so I think that, I think that this is actually not necessarily a bad thing. And I support it. I got to be honest with you. I kind of support this. I don't really want the markets to fall down. And but hey, it is what it is. The only thing that I see that I don't like about this is that for the people that are making over $1 million, there's no difference pretty much between long-term and short-term now. So there's not really an incentive to keep it. I mean, no incentive not to sell, because obviously selling is a lot of selling pressure. It's going to push the markets down. And that's obviously what we saw a little bit of that yesterday. But anyways, that's the only thing I don't like. I mean, there should be some incentive. It doesn't matter who you are. It doesn't matter how much money you make. It shouldn't. There should be some incentive not to sell your investments. I mean, it's overall good. You could also do lower the dividend tax or something like that, so it incentivizes people to buy dividend stocks and then keep these stocks, and they don't have to pay as much taxes on the dividend earnings. Could be a good idea, but some incentive to not sell the stocks. I mean, I think that's a good overall. So that's the only thing I don't really like it. I mean, if you're making $1 million a year, then there's no incentive. The tax rate is literally 50% both ways, the short term or long term. So that's the only thing I don't really like it, but I wouldn't expect this, even if it did pass, which is probably not going to pass. I wouldn't expect this to last very long anyways. The next administration might cut the taxes, or they might cut taxes later on. Who knows? They're always adjusting the taxes. Nothing new here. But yeah, and pretty much the biggest reason why I don't think this is going to pass is because there's a lot of rich senators that are probably making over $1 million a year, so they're probably not going to support this. But with that said, Intel, I want to tell you guys, Intel just reported earnings. One of the first big semiconductor companies, let me make sure I'm sharing this, semiconductor companies that are reporting the earnings. And this is going to be very important for Soxel because a lot of people are saying, well, there's a big chip shortage, so these semiconductor companies can jack the prices up and just make a lot more money. Some people are saying, but there's a huge shortage, so they're not really selling anything because they don't have inventory to sell. So I can see this argument going both ways. So I'm really curious to watch the big semiconductor companies report the earnings for the first quarter and see if they are making money or they're losing money. And surprise, surprise, Intel just reported, and it is higher than what they expected, even though the stock did fall in Thursday's session, and that's mostly just because of this tax hike news. But yeah, I mean, so that could be a good sign here. Intel, of course, we're going to wait for the other ones to start reporting, but I wouldn't be surprised here if we see a jump in Soxel, a decent jump, and it's trading on the 50-day moving average right now. And if you look back, and you can look back this is COVID right here, but you can look back pre-COVID, and it always likes to run along the 50-day moving average, which is the purple line, by the way. But if it bounces, if it hits, it'll bounce, it'll bounce, here, hit, bounce. I mean, a few times. Of course, this was the March dip, which really crushed Soxel and the semiconductors. But it is what it is. So I think that this is a good buying opportunity because it is on the 50-day moving average again, and it was Monday, Tuesday as well. But Wednesday bounced and Thursday the bad news came out. But it is what it is. I wouldn't be surprised if this makes a move towards 45.50. I wrote about this a couple days ago. Pretty much the same sentiment, but today we have the Intel earnings, which is very interesting. So of course I am very anxious to see what the next big semiconductor company earnings is coming out. It's going to be good. I think that Soxel could make a good swing trade between up and down from the 50-day moving average. Could be interesting for some of you guys that want to get in and out. Or it could be a great start of a nice relationship with Soxel for buy and hold. I mean, you can buy and hold it for 5-10 years, who knows? But at least right now there is a shortage. I think overall it should push the prices up of Soxel in the long term. But anyways, guys, make sure you're following me on Twitter. We are doing the live trades. Today I'm not writing about any of the options. I'm just focused on Soxel right now. I'm focused on the news coming out about the tax hike and some of these semiconductor companies. But yeah, I mean, some days if the market conditions are right, I'll do the short-term options. If they're too choppy, then there's not really much point here because you could buy a put. You think it's going to go down more. I mean, but then it might bounce. You could buy a call. Like, it's just too choppy in this space right here. But if we're in a clear direction that we're moving up in, then it's a different story like last week. But hey, we'll probably do some, so go ahead and follow me on Twitter. I will have to look and see what could be interesting later on to see if we can catch any good trends and any good earnings. But yeah, follow me on Twitter. Turn on the bell notifications on YouTube and Twitter if you want to trade along. We do videos like this all the time. You guys know about that. In the article on ProStockAdvice.com, there is a link to the Discord. Also in the YouTube description, there is also a link. Join me on the Discord. We have a really good community here, and we all talk to each other and share advice and opinions. But anyways, guys, I will see you on the other side. Peace.